Hey everybody, welcome. It is Mark Coe for the 17th of April, first Monday after Easter holiday. A little slower markets today, but again, levels. Sure, everybody's enjoying. We're right around U.S. tax day. It's always a fun time of year, but it's always more fun when you're through with it. And I'm sure everybody's filed and on time and good to go. Okay, so let's think about today. I wanted the topic to be a little on this focus of trade, what you see, not what you think or not what you want. So I'm going to focus here on the S&P, and I'm going to talk about what we had coming into this session. So late Thursday trading, you see the market start to sell off toward the end of last week. They're talk in the media, are we going to go to war with North Korea? I mean, that seems pretty unlikely that a full-out war is going to break out over the weekend. But, it's not a weird reason to see some people take a little risk off the table. I want to think about what are the levels we had on the bottom. Well, we know this 2333 had been pretty key in the S&P. We know that because it has served as pretty much a support zone, and it has served as, once it broke through, we saw the lows. The lows were contained. You can see, draw a zone pretty much from 17 to 20 to market right on the lows. What I have highlighted here, you'll see from the March 27th action, was the candle closes. And that's what I like to focus on. You see again, it's a section. So I always like to look at zones as an actual zone and say, if you draw anything you're using, whether it be support or resistance, and say, well, it has to be that tick, you have increased the difficulty of what you do tremendously. The way I approach the markets is realize I want to see the behavior around a zone. The way I draw my zones, I take the extension of the wick. So for example, here this wick trades down to 1775, and then you see the open of the candle that serves for the move up, and that occurs at 23.50. So it creates about a 5 3/4 point zone. So that zone carried forward, and you see how it's highlighted. So on my US Open sheet for the morning, I use 2320 as the reference point, but that's the zone, and that's how you use them. So I'll just carry that point forward, and voila, we'll have it just like that. There we go. So that's the zone. Now here's what's interesting about walking into trading on Sunday night. All right, so obviously we didn't start a war, we didn't react to a war, no missiles were launched. But the market's still trading just above that zone. It's trading just above it. So here's where I would talk about you have to trade what you see versus what you hear. I think you're probably so much better served by just ignoring most of what's out on the news, because I think it's just worthless. I think you're better off to trade what you see and what you know. Here's what you know about the S&P. You know that the market, the sellers had been in charge from late Thursday afternoon, just above that 2340 level, just above that 2340 level. Sellers haven't been challenged and won't be until you trade back there. But the point where the buyers step in has been right above that 2320. That point was there last night. It had been on your screen for days. So where I like to look at the focus is trade what you see, not what you hear, what your thoughts are. We can have the thought that S&P is going to trade lower. That's fine. But what needs to happen for the S&P to trade lower is to continue to see that bottom edge break, continue to see that bottom edge give way. So going forward, think about it. What is the reaction? What is the market showing you? Because the market here is showing you buyers are willing to step in, support that zone. So regardless of any longer term analysis, keep the focus on what's happening in the here and the now. Trade what you see, again, not the way you want it to be. I may want the S&P to crack 200 points. Doesn't matter. I still have to react to what it is doing. No different in any markets. You can look across currencies. You can look across the futures markets. The same thing. But if you will do yourself the favor and understand who is controlling the market, from what levels are they fighting, that will give you a lot of the answers in what you look to see going forward. And it will should really help to improve your dealing and just keep you in that position of strength. So hopefully we'll get a bit of a pickup as we trade the latter half of the week. And for the 17th of April, I'm Mark Coe. Cheers.